Good morning and welcome to your Money Morsel with Harvard House, where we use the power of social media and video to keep you up to date with what's happening on the markets and your money. I'm sitting with Michael Porter, Chief Investment Officer of Harvard House. Michael, good morning to you. Thank you for your time. Michael, we're releasing a new article in Intuition on the power of compounding of dividends. And dividends have to really be paid in order for compounding to take effect. So we saw during the pandemic that dividends were cut in many cases. Can you maybe give us just what's the environment related to dividends now post the pandemic as we sort of almost 2 years down the line? Have things recovered? Have we seen dividends come back strongly?
Yeah, morning, Robin. Thank you. Yeah, I think one of the biggest casualties in the pandemic was investment income, whether it was interest or dividends. Both were cut to the bone, and we're obviously seeing interest rates starting to rise now off a very low base, and we expect more to come. So there is a little bit of a recovery there. On the dividend side, I think if you look at 2020, it was a very, very poor year for dividends. Obviously, the height of the pandemic, the height of uncertainty, companies being extremely cautious because they didn't know what was coming, and rightly so. I mean, you wouldn't expect anything less. And then also regulatory issues. You know, the Reserve Bank stepped in and told the banks they weren't allowed to pay dividends until there was more certainty. So across 2021, we saw a strong recovery in investment income, led by the mining companies because commodity prices were at record highs for much of 2021. So the mining companies paid out record dividends. But even on the industrial side, companies certainly started to come back. Cash flows improved and dividends have improved. The one sector where income has not yet recovered is on the financials and on the banking sector. I think the banks were naturally cautious. The Reserve Bank was still also naturally cautious in allowing banks that freedom of their capital to pay back dividends. And so as the banks start reporting their results in the next sort of 2 to 3 weeks, I think this is going to be probably one of the areas where there's the strongest recovery in dividends still to come. But for 2022, we're certainly looking at a much more normalized dividend outlook. I think dividends are certainly back. Companies are very comfortable to pay them. Cash flows are strong. So, it's a good environment.
Fantastic. Now, property is a key asset class for us in paying income to investors. And property was probably hardest hit during the pandemic with work from home, and everyone believed that property was no longer going to be an asset class. How has the recovery been in that space, and how are those dividends looking?
Yeah, I think on the property side, I would probably say that the recovery is maybe 75 to 80% complete in terms of dividend flow. I think obviously on the capital side, there's still some way to go to reach pre-pandemic levels. So there's still some pockets of the property sector that are really weak. I mean, we all know that office property is extremely weak, although the return to work is gaining momentum. And I think people are realizing that work from home can be a flexible solution. You know, you don't have to go to the office every single day, but the death of the office, I think, has been greatly exaggerated. So we do expect that to recover. There's also areas of the economy where I think, students are going to get back to universities this year, and some of that residential and inner city sort of residential space is going to recover. On an income point of view, I think what the pandemic did was force everybody to reevaluate how much income they earned and how much they paid out. So typically, property companies would pay out 100% of their distributable earnings. Most companies, in terms of the law, you have to pay out 75% to retain that REIT status. Most companies took the opportunity to cut their dividends to the sort of 75% payout ratio. Companies are now oscillating between 75 and maybe 90, 95. A few are still at 100% with the strong balance sheets. So from an income point of view, I think income is recovering. Most companies are paying dividends again, but payout ratios have been adjusted, which in a way is a good thing. Some capital is being retained for growth. So from an income point of view, if you actually take 100 as a level pre-COVID, we're not yet back at where we were pre-COVID. But off this base, income is growing again in the property sector. So it's not maybe in absolute terms, you're not getting exactly the same amount, but there is growth off this base, which was obviously then underpins the share prices going forward.
Fantastic. And while we're talking on property, just before we come to an end, the Harvard House BCI Property Fund was voted the certificate winner for the Raging Bull Awards for 3 years on an absolute return basis and 5 years on a risk-adjusted basis. So that's 2 Raging Bull certificates for Harvard House at this year's Raging Bulls, and that makes it our 6th Raging Bull Award in 6 years. So well done to you and your team, Michael, and thank you for joining in, and don't forget to subscribe and click the bell so that you can be notified when we release a new video. Thank you for your time.